Good morning, good afternoon, good evening, May the 24th. Everything we did yesterday worked out. All right, so I left you guys around this area here. I suggested I'd be willing to be a buyer for the next two boxes. So that's what I ended up doing. And then everything came back. Here we are now. If we look at the calendar, I think we have news coming up in about 1 minute. Michigan consumer sentiment. So we'll let that come through. And then as a Euro trader, we don't want to fight the US news, but as it stands, the US has been slipping on the numbers. And so we want to be selling up here, right? So if the Euro has an opportunity to make a higher high, so higher than yesterday's high, which is this purple line here. If we go up here, we want to be sellers, right? We want to sell this area here. As a matter of fact, we want to be selling all of this, right? Sell, 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 right? This is a range. This is the roof. This is the floor. We bounced off the floor yesterday, and we're looking to be bouncing off the ceiling, right? So as it pushes up, we sell, right? So let's go take a look at just today versus yesterday, like we always do, right? Inside bar, actually, it's just even bottom, lower high. Green candle, and it's trying to push higher on this scale. Let's go look intraday. All right, so intraday, we have another inside bar on the hourly range. We're pushing on the edge of our channel, threatening a breakout, so to speak. Right, we're coming off of it. And the news is coming up in about 30 seconds. Let's put the squawk box on. There we go. All right, so on the 5 minutes, we're going to go look inside there and start drawing the ladder. All right, we can almost use yesterday's. How about we do just that? It looks like it's moved off of yesterday's levels.
10 seconds.
This could go up a bit. If I'm just looking here, this could go up a bit. This could probably go up a bit.
69.1, 69.1, higher than forecast, 67.7. 1 year inflation final, 3.3%, 3.3%, lower than forecast, 3.4%. 5 year inflation final, 3.1, 3%, 3%, lower than forecast, 3.1%. Expectations final, 68.8, 68.8, higher than forecast, 67. And conditions final, 69.6, 69.6, higher than forecast, 68.8.
All right, so that's done.
Seeing some slight downside in dollar, slight upside in stocks.
And downside on dollar means upside on our euro. We want to be selling resistance, right? Clearly, we're having a tough time coming through here. Let's see what happens in the next couple of bars, right? See if it just blasts off or if it kind of rolls over. All right, the goal is to be a seller. Where the idea is simple, right? We have fulfilled the average daily range. And on the Friday, now that the news is out of the way, what are the probabilities that we do more than an average day of work? The probabilities of doing more are slim without a catalyst. And now that the catalyst...
We have posted the University of Michigan Sentiment Survey May final report on the feed for all those interested.
Now that the catalyst is out of the way, we can actually start to trade the reaction, right? So we want to be selling red candles. Anything that pushes higher and higher and higher, we want to be selling green candles. What am I talking about? We want to be selling the green candles that push up, right? So we're willing to sell multiple boxes worth, like we did yesterday. Yesterday, we were buying multiple boxes, right? Ultimately, is to test this upper range here. And there's about 36 pips between here and that upper range, right? So that's 4 boxes. We have 4 boxes to get to this upper level, which is an average move. Today just happens to be a slim day. It's a slim average day, just like prior. Right. So let's sell green candles, and then hopefully we're just going to be walking the market down 2 to 3 boxes, back and forth, back and forth, back and forth, thinking that this might be the wick right here on the top of the day. Right. Maybe we are stuck in this channel until Monday. Okay, so let's do that. Let's get ourselves ready to sell green candles, preferably at resistance. Something like this. And then anything above that for the next 3 to 4 boxes. If we don't need 3 to 4 boxes, we remain in box number 1 on the way down. All right, so we'll play it that way, and then we'll see what happens. Earlier, I had a Fibonacci on here. I was looking at this. Right, so from yesterday's high to yesterday's low. Today, we have already retraced to 88%. Right, so for us to go beyond and tag these extensions, we have to break 100%. We have to make a higher high. That's what that is. Okay, so I'm just looking at the fact that we've gone past 50, but we're kind of stuck below 100 because of our average daily range and no catalysts to push us further. So let's sell green candles, and hopefully we'll be selling on the way down and not counter trend, right? We're not building a position like this, not on a Friday, right? I don't want this to happen going into Monday. Right? I'm hoping to just walk the market down a couple of boxes, maybe walk the market back up a couple of boxes, just minimal sideways range, because I'm trying to stay in the wick at the top of the day. The US session today, right now, is going to end the weekly candle. So let's go take a look at the weekly candle. Right? How can this end? Do you think on a Friday, this weekly candle is going to turn green by busting out of the channel? It's a possibility, but what's the catalyst? Right? So it's more likely that we just stay sideways in here. Next week, we might get the catalyst, right? This is still a halfway pattern. It's still a range. Sorry, a flag. Right? Looking at it on a 4-hour scale, there's a probability of a breakout. Right? Again, we need a catalyst. Right? We need a reason to see it go higher. Rig counts? Man, I don't think so. Right, so let's sell this right there. I'll put 2 there. And then I'm ready to put 2 at the very edge. I'll be 4 in this box. And then I'm ready for 4 more in that box. In my case, I'm using 4 or 5, sometimes 6. I tend to average up my 1% per box because I tend to have the money to do so. I'm not operating out of fear, so to speak. Maybe this just goes sideways, 9 pips at a time for 8 hours, right? This US session is ending the week. And on a Friday, there's the possibility exists that we do, an average day, or in this case, we can't do less than average. Maybe we can do more. And I'm willing to sell whatever excess above average we get, right? That's what that is. Targeting the previous high makes total sense, right? There's probably a whole pile of orders up here, really enticing to the market. And we are going to sell that stuff while most people would be tempted to buy a breakout, which ends up being a low probability trade, right? A breakout ends up turning back for a retest. And so the way we operate, we end up participating on a retest instead. Right? The breakout actually ends up putting us in a fix situation. All right, so we've had a pretty good week. Let's review real quick. We're still going up 2 months in a row, average losses, average wins. If I look at it daily, we lose, on average, we lose every day, more or less, depending on which week you're looking at. We win every day, pretty much the same. We have a 98% win rate. We've won 2,300 trades, lost 47. We've brought home about 6,800 pips. So, this system is easily scaled. I'll just leave it at that. Let's go take a peek at our dollar index like we always do. I don't think I looked at it yesterday. So yesterday we were threatening the upper resistance, the measured move. We broke out of it. We're now retesting the break. It's also brought us back, on the 4-hour scale, it's brought us back to or towards our moving average. That happens to be the 50 4-hour bar moving average. Right? And the yields are also pulling back. So everything here makes sense. We're still in line for a move down here over time. We just have to wait and see. So we build a small short position today because we're expecting to play the wick on Friday, on the top of Friday, and we're ending the week. So if you look at the weekly candle once more, we are in the wick at the bottom of this weekly candle, right? We're trying to figure out where this wick will finish, right? If we go higher, as we're doing here, we're taking away from this bearishness. If we close lower, in our case, that's kind of what I'm looking for. We're adding to this bearishness just temporarily, right? We're still looking for a bullish move next week. Right? But right now, as we speak, we are right here. We are the wick. Right? If you look at it daily, this is the wick. We're just trying to figure out where the weekly wick will finish. And as such, we are trading inside of Friday's wick. My first trade is right here. And I'm trying to test this on the way down. Right? I'm assuming anything higher, I'm a seller. And I'm doing that here, right? I'm making these assumptions here. Is it going up the ladder? Is it going down the ladder? And then the ladder is represented here via the boxes. And here's dynamic. I can choose to measure whatever I want to measure. Small crowd today on a Friday. Yeah, I was listening to music and I didn't realize the mute button was not on. So you guys got a show tune to begin with. Oops, sorry. I should actually close that tab. There we go. Right, we're just sitting here waiting, see if it's pulling back. Is everybody's sound okay, or is it just one individual who's having problems? Can you guys hear me? Punch a Y in the room. Yeah, okay. Okay, good. Thank you. Phew. This is my first time doing this kind of stuff, man. I'm just a day trader. I'm officially a YouTuber now, however. I've met the requirements for monetization thanks to all you guys and all these videos I've uploaded. So hopefully you get value out of this. And I'll keep uploading. That's the idea, you know. Send the elevator back.
ECB's Nagel says the wage uptick wasn't a surprise.
Trading doesn't have to be complicated. It's simple, but it's simple but not easy, and it doesn't have to be that way. You know, we can simplify learning to trade by not hiding the facts. You know, so yeah, I just want to put it on the record. You know, posterity's sake. I'm not here forever. Right. So if we go back and look, we close that gap. Right? We just did enough work to close the gap. Yesterday's PMI created a gap. We closed it. And we have no reason to stay up here today.
ECB's Nagel says the inflation trend is downward.
Right? If we do make a higher high,
and Nagel says core and headline inflation are both decelerating.
I want to put one more.
And the ECB can probably cut rates in June.
So if we do make a higher high, we're a seller up there, and we're a seller for the next line above. All right, so we just got our first wins. Whoop, whoop. Full average daily range. How much further can it go without a spark of some kind?
And ECB's Nagel says we probably have to wait on the next move until September.
Awesome. That's working out good. Boy, oh boy, oh boy, oh boy. Memorial Day this weekend. It's also a long weekend, or it was a long weekend for us here in Canada. So holiday season is upon us, right? The summer season is here. People will be taking time off and holidays, and markets are going to start to wind down. It's not going to be instant, right? It's a slow, whatnot. Over time, you can
Taking a look at the Fear and Greed Index, 53 out of 100 equaling neutral. And the Crypto Fear and Greed Index, 74 out of 100 equaling greed. And the VIX currently down 3.21% at 12.37.
This right here.
US Treasury yields turn negative. 10-year yield lasts slightly down at 4.472%.
Doesn't matter what level I set my computer speakers at, that squawk service, they have each a microphone, and I think they're each using a different setting. I'm gonna have to message their support desk. Let them know. It's the most annoying thing. This looks good. It bounced here, little poke, came back. You can find this 9 pips is everywhere. Clearly, you know, it's not a random amount. It's just a number, and the market clearly moves more than 9, so 9 will be everywhere. It's just how it fits in the box and how many boxes. That's the intriguing part, right? This piece right there. Why does it fit just perfectly? And that happens over and over and over. We could use a 6-pip box. You could use a 30-pip. You can use whatever box you want to use. It's the behavior around the box is really what's making me my money, right? It's how I get to protect it, how I get to manage it, how I manage risk. It's because of what I do on the perimeter of the box. The money itself is extracted from within the box. And so it doesn't matter what size box you have, you extract within it and you manage risk around it. So don't worry about doing the calculations wrong. You don't have to worry about being wrong with the box itself. Just don't be wrong on how you use it. That's where the consistency comes in. All right, so we want to sell green candles. We only had one opportunity right there, and I was looking at other things. I really don't want to go too heavy on a Friday, ruin a week of work in a couple hours. Sell green if it shows up. The fun part with Forex in general and all the currency markets is there's always a buyer and there's always a seller. And there's two sides to the story. There's two currencies here, like two governments, two of everything. Whereas if you're trading commodities or equities, there's usually you're dealing with supply and demand. Like it's a very different environment. Typically not mean reverting. Right? It all revolves around buying. And so keep that in mind when you're trading typically futures You know, indices, things have a tendency to go one way more than the other. And so you'll find yourself protecting yourself or looking for buying opportunities a lot more than selling. Right? So when you're trading futures, you're primarily a buyer. Let somebody else think it's going down. There's a green candle, finally. Yay. And we're in this bottom box now. Depending on how you line up this one, maybe we're here, or maybe we're there. You could, if you put it on the highest high, then this sets us up here. You could put it over here, but that was a waste of time, right? We got tricked out of here. So let's hope that this is the real move. And then we end up somewhere here or along this hedge in the next little while. There's a green candle. I'll put a third one there. So we've had two winners already. They were on top of each other. Let's put another one. This is now box number 2 because this is my box number 1. So this is my box number 2 right there. 1. I have 3 more clicks to put in this box. I have 2 more clicks left to put in this box. Right? I'm hoping it turns around in here. Or if it keeps on going, then I'll be in box 3, in box 4. If it rolls around, then I'm making money. All right, so I have 3 clicks in the bottom box. I have 2 in the upper box. These are just on the side waiting. There's a third one. And there's my 5th there. Oh, sorry, 4th and 5th. If you can only afford 4, that's fine. If you can only afford 3, that's fine. You'll be recycling them when they close. And over time, you'll be able to afford 1 or 2 more clicks. It's pointless trying to rush this. I beat myself up over not getting it fast enough, and it really was a waste of time, a waste of effort, waste of energy, beating myself up for no reason. Here's my 4th coming up right there. And so I'm left with 3 at the bottom, 4 in this box. And if we go up here with any kind of luck, I'll be able to put some trades. Right? Testing the previous high up here. No, this one. Right? We're just trying to find the top of the daily candle. We're not supposed to be picking tops and bottoms, remember? That's where the money's at. Oops. All right, so we've been building a position for about 30 minutes. If there's an extension on the day, it's going to come in the next few minutes. If there's a pullback on the day, it will come in the next few minutes. We don't want things to be too obvious. If things are really, really, really obvious, then it's obvious to everyone. And that's probably not what the market will do. Right. So when the market is obviously trying to go higher and higher and higher and higher, people are thinking, oh, it's going to the moon. We're looking left and we're finding reasons for it not going to the moon. And we usually find those reasons within 4 boxes. Yesterday, we found reasons to not go to the South Pole within 4 boxes. Right? We started here, and within 4 boxes, we found the low, and we got paid for our work. Today, we're doing the same thing, but in the opposite direction. We're attempting to find the high and get paid for our work in due time. It's just situational. I happen to trade the North American session on Friday, which ends the weekly candle. So it's a wick. The Friday wick is the weekly wick. And so Friday's close comes with a wick, hopefully. Sometimes it doesn't. Right? There are days then when the market just closes at the high or at the low, like this, opening at the low. Right? There are days when closing at the high, you know, when the market is just push, 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 and there are no wicks. It's just situational because I've fulfilled the average daily range on a Friday with no news left on the calendar. People are looking forward to leaving their computer, not staying and working overtime. Right? So if there's a trap, we're the ones that lay it, not fall in it. Right? So testing the high here, or resistance, I should say. Support, resistance. I'm waiting to see if I get to spend up here. Right on time. Bottom of the hour. Bottom of the hour. Let's put the yellow in there. And we're hoping to be finished somewhere around here. Finish building the position. yesterday. Where is it? Come on. This was what we did, right? We built our position. This is when we ended the recording, and I continued to build a position for the next two layers, the next two boxes. And that's kind of the intent here. Right? I want to finish the recording somewhere around here. And then if I have to, I'll continue to build a position, but I'm kind of anticipating we won't go very far. Anything can happen. Maybe we just roll over here, or we do something like this for the next 8 hours. It's just a way of kind of thinking through the different possibilities, one average move at a time. Anybody can do this. Move a box around and think about what could happen. Positioning ourselves on the Friday, going into the close of the week, all that good stuff. That's what we're in for, right? Ultimately, we're going, we still have this target, but we're not trading for this. We are trading for 2 hours today, preferably 2 hours, but maybe less, maybe more, right? The idea is to just trade what we see right here, right now. And we do that by zooming in and then asking questions, right? Are we going up or down? We trade the facts. Over time, the facts lead you to that delusion that we have on the daily chart. And you start to build this idea that you had. It's like the architect ends up doing the construction. Higher high, just enough to, throw people for a loop. I'd be curious to see if we make a lower low. Yeah, I think the squawk box will be quiet now that there's really no news left on the calendar. 9:25, there's an ECB speaker, and then at 11 o'clock my time, sorry, in an hour from now, there's an ECB speaker, and then an hour and a half from now, there are oil news. That's about it. That's about it. Right. Let's see how we make our money today. Pockets full of change. If this was like midweek or Tuesday, Wednesday, we'd have to think about extending on the day, even if there's no news, right? The potential is always there. On a Friday, the potential is diminished because most people want to see the weekend, right? So it's not like, unless they have a purpose, and a specific purpose for moving, it's not going to move on its own. Right? Somebody has to place a big, fat freaking order. has no reason to go unless you offer it a reason. Come on. Friday, bars. The bars have been about 1.5 pips this entire week. Every day in the morning. We'll have to take a note of that. A month or two ago, at this time, the average is closer to 2 or was closer to 2. And when there's a news event, usually we'll be floating around 3.5 pips average bar for the duration of our trading session. The 3 pip target is a function of this ATR. Usually in this 2-hour window, ATR is 3 and the target gets fulfilled within a bar. And now because ATR is shrunken, I have to wait to make 3 pips. Still making it, but not at the same rate. All right, we're about to close a couple more winners. Beautiful. All right. Put this there just in case. I'll put this here just in case we continue. Let's look to our probabilities. Because we're forward thinking, preparing for the next leg, basically we're saying the current leg is finished. And I'm selling up here because I think we're going to finish somewhere lower. I'm not saying it's going to the South Pole, right? It's just lower than the high. That's it. And then we can measure from the high 3 to 4 boxes and then assume that if this is a trend, 3 to 4 boxes off the high is a good place to resume the trend. Right. So we're selling because of situation, position, blah, blah, blah. It's Friday. But if we were in a different position, in a different situation, we might be buying this market, right? So there's more than just technical analysis. It's that's the magic of trading, just that discretion. It's all black magic, witchcraft, illegal sciences. I'm a witch. Should I put another arrow up here? Right there. There you go. Tell Mr. Market what my wishes are. It worked yesterday, but it took forever. I think I painted my arrow here somewhere yesterday. Or was it here? It's Photoshop. Right. If you can afford it, take a trade. I will. Right there. 1, 2, 3. I still have the trades in box number 1. And this is my box number 2. I'm recycling the trades that closed. These are the first trades here. And everything above this is box number 2. This is box number 1. And this will be box number 3 if I need it. Where are we going next? Up here or down here? Or here? It can't go here, so it has to be one of these 3. I'm going to hope for something like that. And if I'm wrong, I have a process to deal with being wrong. Right? There's nothing wrong with being wrong. It's staying in the mistake that creates the issue. Fixing the mistake is a process, and it's totally okay, right? It's part of trading. Discovering the mistake, realizing that it's a mistake, that's also part of trading. And over time, you get really good at that part. You end up making fewer mistakes. You're willing to survive whatever it is you get into because you have the skills to repair. If I'm playing a bounce, right? I'm attempting to play the bounce off the top. I'm planning to play a bounce off of this. Clearly, I'm ready to fix a breakout. Right? That's why I have boxes 2, 3, and 4. It's in case box number 1 does not bounce. Right? So if box number 1 turns into a breakout, I fix it. Right? I look for break even. I look for the average of the 2 boxes. It's really not more complicated than that. And if I'm wrong, I'm wrong. I don't give myself grief over it anymore. The grief came for the need behind the money, right? Every time you clicked to take a trade, it's because you wanted to make money, probably because you need it. And when it went the wrong way, it's like, not paying this today. And so it just compounds the stress of trading, right? The anxiety of trading. You can't trade with scared money, period. It really is that simple. Stay in the demo account until you trust your track record, and then try with live. And then if you're comfortable, go prop or stay with live. Compound your own account. These prop firms are really more set up for an insurance policy type thing. Right? If you already have the skills and you have an account and you want to protect the account, yours, go and rent somebody else's for $500. And that way yours stays safe and you can still earn an income. Right? Otherwise, don't go down that rabbit hole without the skills. Yeah, and they market these $250,000 account on sale because they know, first off, you don't have $250,000 and you think more money will make you a better trader. And that's just BS, right? If they gave you $100,000 account with a $5,000 drawdown limit, you're not trading 10,000, you're trading the drawdown limit, 5,000. And with that 5,000, they want you to make 10,000. So you have to double what you're working with. That's a tough nut to crack. Right. And so, yeah, the whole prop industry is marketed for them to make money. Right. It's an opportunity for us, but it's for them to make money. So make sure you have the skills. Otherwise, it's giving away $250 every time you fail. We have to understand that this is a long game and we just don't play it that way. Most of us take, like, it took me 6-7 years to figure out this was a long game. In my world and my way of thinking, the way I'm doing it will take me time, but it will be successful. And so I just don't have to be too concerned with how long it takes. I just have to show up and do it. It's not like I'm chasing home runs. The eighth wonder of the world. We're just using small daily deposits and the law of time, compounding. And we protect from the downside. Right? That's the risk manager part of the gig that we're in. Oh, come on, let's close all of this stuff so we can call it a day. Make that our daily deposit. If it continues to drop, we continue to sell green candles on the way down. We don't want to be buying, we don't want to be selling breakdowns because eventually you'll sell a false break and it rallies back up. Right? So instead, we play for the next move. We don't want to be chasing the current move. Right? So by selling at the top of the green, the next move should be in the direction of the trend, right? So that's kind of what we're doing, like that. Right? So we're exploiting momentum, or we're extracting momentum from volatility. Let's do it again. Show me green. Or winners. Love waking up with winners in my cup. I could probably adjust this box, put it on that low right there, and see how it came to the top within a pip or so, half a pip. And then I'll just adjust this and move this somewhere. All right, we're looking for a green candle to re-enter what we've closed. We're approaching the London fix, and today's the 24th. So yeah, next week we'll have to keep an eye at the top at this time of day. Right. So next week is the end of the month. This particular hour of the day will be very critical every day, especially when we trade the euro. right? That's the end of the European session that begins at this time of day. And the European traders and bankers have to set themselves up for the end of the month. And that will happen next week. 2 days before the end of the month, 2 days before the calendar end, it's referred to as value date. And we want to look at that as institutional, the last day for institutions to get their poop in the group. It's 2-day settlements. If they don't get it done on that second last day, it will show up for the next month. So here's a green candle. I have a few trades to recycle. I want to see it a little bit greener though. I'll put one anyways. And if it does go higher, I'll put the other 2 or 3 that I have. We're just trying to keep an even keel. We're trying to not go too heavy, too light. And by picking one side over the other, typically the probabilities are in our favor. And then we end up fixing the low probability trades. And you saw from the record that low probability trades are, they're normal. They're there. And our job is to catch them and make them disappear, right? Make them disappear. The risk manager manages the risk and the trader takes the risk. Right? It's a two-man operation. You happen to be doing both. You click the trades because you followed your rules and you're managing the losing trades. Otherwise, they're just going to the target, right? So the risk manager is managing the losers. Not every trade is a loser, hopefully. Otherwise, the trader is doing something wrong. Right? And then as you operate as a business, you start focusing more and more and more on risk management and money management. You realize that there's no holy grail. Just like any other business out there, your clients can stop showing up for whatever reason any day. Right? So take it while it works. I'm not worried about this particular way of trading ever stopping to work, failing to work. There will always be someone trying to buy high. I'll sell it to them. And if it happens to break out, I'll fix my way out. And so I just took a trade here at resistance, right? Support / resistance. I'll take more here. 3 minutes, 4 minutes before the London fix. You have to have that delusion in your mind. You have to have that big story, that big picture, trying to figure out what is that particular group of traders attempting to do, right? The people that trade on the daily chart as their smallest time frame, right? They have many, many, many zeros in their account, or they're doing it on behalf of someone with many, many, many zeros. They're waiting on the candle close to spend money. So they were waiting on yesterday's close to see what to do today, right? So how yesterday closed tells them how to go about trading for today. And that sets up for maybe weeks and months, right? It's an entry on the daily chart and it's moving up on the daily chart, right? There's a reason why the guys that trade the daily chart are thinking bullish for today. Right? Maybe they have a bigger picture in mind. And so we're just comparing today with yesterday because we don't have 10 zeros in our account. We can't figure out from the bigger picture where the ultimate goal is, but we can, for 2 hours a day, raise our probabilities of success by just comparing with yesterday. Right? So by comparing with yesterday, the probabilities of success go up. Ultimately, we might be right on track. We might be riding coattails 2 hours per day. Right? If we're wrong, we ride coattails in the right direction. At some point, you end up fixing your mistake and keep going. Right? So yeah, it's intraday trading is a different beast. It's a different animal. Right? This is why top down is so critical. We look at the daily guys because that's their lowest time frame, and they're setting up for something really big, like much bigger than what we think. But then that has to happen intraday, right? They're taking entries blocks at a time, and we see that here, right? So we can participate on a time frame that is affordable to us. You know, when we start to see stuff like this right here, right? This is a range. This right there, that's a nice little range, nice little channel. That happens to be everywhere, right? That's the average daily range that we're assuming. And then when we have something very different, you know, this is on an hourly scale, but imagine this on the daily. It's the same concept, right? It's the same concept. If this was a daily, these would be days, average days, and all of a sudden we bust out of the average and then we resume. Right? So we're just trying to figure out what is what. The market can only do one of two things. Day to day is a different story, and we kind of tune to that or tune ourselves to it. Still trying to figure out which way we're going here. Right? We're going to run out of time. According to this, we should be heading over here. Right? But then if I just go like that, we could be heading over here. Right? So perception, perspective, whatever you want to call it, you know, poor judgment, years of experience, it all comes into play. And you'll learn from all that stuff. Wash, rinse, repeat. Yes, it is a beautiful thing. I'm going to slow down on my clicks. I'm already at 6, and I'm curious to see if I need to go up here. All right, so what time is it? Bottom of the hour or top of the hour? And boom, boom. Somebody just pressed a button somewhere. All right, the timing is valid, but the size, the magnitude is what we don't know, right? We never know from day to day if this will be worth anything. Sometimes it just starts right on cue and goes for hours. And sometimes it starts right on cue, goes through resistance and fails. Right. And so it's the timing you have to keep an eye on. You can use that timing as an exit strategy. I really want to see if I get up here. This right there, that test of the previous high is really tempting. I'd be a willing participant up there. hoping to close more trades today so I can upload the video today and we don't have to wait till Monday for the upload. That's the problem with recording these things and uploading them. I want to wait for the trades to close to complete the video so I can have that picture at the front. That way each video can be watched individually. You don't have to go to tomorrow's to see the end. The individual recordings. Those of us here in the room have lived it. And so the recording is just for posterity. It's not for following along. All right. So next week, the goal will be to test the outside of the, break the channel, test the outside, test the break maybe, go up to here, maybe come back. Eventually, we're looking to find our way up there. Ultimately, we're hoping to fulfill a average move. Right? If this is a average move, we're looking to, oops, sorry. There we go. And so we're looking to get up in that area there. Okay. Just a measured environment. Anything can happen. It could fail for whatever reason, mostly news related.
Keeping an eye on the markets here, S&P 500 extending gains, so that's up 0.7% now, and Nasdaq up 1% as well, outperforming this morning.
Higher high, pushing into resistance / support. Right, this is resistance. This was support. We want to be sellers up here. Few more minutes. And hopefully we can call it a day. If it makes a higher high, if it breaks this level here, a lot of people will say, oh, it's going to the moon. And in reality, it's probably going to test the previous high, this here, and find a reason to fail and come back. And then next week, we'll try it again, and so on and so forth. Right? It's very, very rare that things just go right the right way right out of the box. There's time involved, and that's usually what gets to the trader, right? We give up on a good plan, throw away a good strategy, and within 24 hours, all your trades would have worked out. So getting ready to bust a move, and that's okay. Right? We're not freaking out. There's no panic here. We're ready to play the next two boxes if we have to on the short side. Don't fall for the trap, especially on a Friday afternoon or Friday morning for some of us. It's not going to the moon. It's the average daily range that we're looking at. And the fact that there's a low likelihood or a low probability that we can, there's nothing that says we can't, but it's a low probability that we do much more than this on the day without some sort of a catalyst. And we've already done 4 or 5 pips more than more than the average. Right? So the idea would be anything extra above what we've already added almost calls for a mean reverting type of a move, right? Type of a trade. Looking to get back towards this average. So anything that breaks outside, a lot of people will fall into the trap, go long, and then come back on Monday to a lower open, or, you know, we still have to make a low next week. Remember that. Even if we finish next week higher, next week still has to have a low. Hey, curious to see what's gonna come now. Intraday, what does this look like? On a 4-hour, a lot of the bigger guys are looking at this. They're probably watering at the mouth. A breakout is imminent, even on a 4-hour. In this case, we have an hour and a half, 2 hours left on this candle. On this here. So if we look at this on an hourly scale, ooh, look at that. It's setting up for a nice little move. All right, something like this. Something like that. Right? How many people are going to fall for this? Oh, it's going, so it's going, it's going. No, it's not going to the moon. Right? Put yourself in the other trader's shoes. There's a lot of resistance between here and there, which is the high of. So we know what to do. All right, let's see what happens. Put me in the box so I can sell. Come on. I want to test the high. All right, remember the weekly candle? We're just making that bottom wick bigger and bigger. We're shrinking the body. The way we were looking at it earlier, right there. As we speak, we're right here and we're threatening to go up, but I'm thinking we're going to finish down. Right? That's kind of what I have here. And this is 5 days of work, and we are currently on the very last day, the last, 7 hours of the day, 8 hours of the day. There's nothing going on, right? And so expecting the moon today, low probability. It could happen, but low probability. Maybe it's going here. who knows what it has in store. There we go. There we go. Oh, I just want to see it push closer to the highs. There we are. Take a sell. Boom. All right, so now I'm officially putting trades in that third level, that third layer. I sold to the top of this box. I sold in this box, and now I'm selling in this box. So that's 1, 2, 3. Tight, very, very tight. Hoping that we eventually come back down. All right, we're just testing this, and I'm expecting or anticipating a close a little bit lower. See right there, daily. Look at it on an 8-hour shift. This is the North American shift right now. Right? This was the Asian session, the European session, the American session.
It's 11:25 a.m. Eastern time. We are
Oh,
expecting comments from ECB Centino, who's
way too low. And I have that thing at the lowest setting, man. All right, trade number 2. So that's trade number 2 and box number 3. And we're still looking for a move in our favor this way. If it goes up 2 more boxes, no worries. No worries. Few more minutes and I'll have to let everybody go. I have to go take my pills and stuff. Take care of this leukemia. That's the all-time consuming other thing that eats up my time. Doctor's orders. Come on. I really want to see if I get to spend a couple more clicks in here before I let you guys go. All right, so the goal for Friday and the end of the week is to remain a seller. Preferably we'll see this close today. If not, don't touch your stops because we've agreed to this. Right? We agreed to losing 36 pips or less. That's the ejection seat. It's not the exit strategy. Right? We choose the exit strategy down here. And also don't touch your target. And just let things unfold. Right? And if you keep participating, you can only sell one more box above the red line, and I think we run out of money at that point. Right, so right around here we'll be out of money, and that's when we expect that roll. Right, if it happens. If not, I'll see you Monday morning with a bunch of wins. All right, if you're on my calendar for today, I'll see you in a few minutes. Talk soon. Enjoy your weekend, folks. It was an awesome week. Trade safe. Bye-bye.